learn with joy.
Hi, hello, champions. Good morning. I hope preparation is going well. Today, I am going to discuss one of the very interesting concept, and I feel excited to explain this concept, which is called as under or over absorption and treatment of the under or over absorption. So, without wasting the time, let me start with the concept called as the under or over absorption. To understand this under or over absorption concept, first we need to understand absorption rate. In the last video, we have seen how to convert individual expenses into departmental expenses and how to charge service department expenses or service department cost to the production department, which is called as secondary distribution summary. Once we complete with the secondary distribution summary, the service departments will become zero, entire cost accumulated in the production departments. From the production department, we need to charge it to the each and every product produced in the factory. How to do that? Let us understand that first, which is called as that I am going to explain through calculation of absorption rate. Let me take an example. There are only two departments, P1, P2. The overheads which is charged to the P1 department is 20,000, to the P2 department is 15,000. Let me take the base labor hours. I am taking the base labor hours. P1 department labor hours is 10,000. P2 department labor hours is, let me take an example, 3,000. If you calculate overheads divided by labor hours, we will be getting absorption rate per hour, per labor hour. Absorption rate per labor hour, or we can call it as the overhead rate, overheads per labor hour. Overheads per labor hour. Normally, we'll be calling it as absorption rate. We'll be calling it as absorption rate. Rupees 2 per labor hour. Rupees 5 per labor hour. What is the meaning of this 2 rupees and 5 rupees? If any product, let me take an example, mobile. This mobile is passing on through P1 department, means in P1 department it is consuming 1 hour. In P1 production department 1, it is consuming 1 hour. How much we are going to load or how much we are going to add to the product means 2 rupees. If the same 1 hour consumed in P2 department, we are going to add with 5 rupees. That is how we are going to recover the cost by selling this product. Now, for example sake, let me take product A. Let me take product A, P1 department, P2 department. Product A is passing on through P1 department, P2 department. In P1 department, it is taking 5 hours. In P1 department, it is taking 5 hours. In P2 department, it is taking 2 hours. In P1 department, we will be charging with 2 rupees per hour. In P2 department, we will be charging with 5 rupees per hour. 5 into 2, 10 rupees. 2 into 5, 10 rupees. The total cost charged to product A is 20 rupees. The total overheads charged to product A is 20 rupees. We would have already calculated. Let me take the product is this remote. We would have already assessed how much is the material cost and how much is the labor cost. The plastic consumption decides the material cost, and the time spent by the labor will decide the labor cost. Now, direct material equal to, let me take an example, 10 rupees. Direct labor equal to 15 rupees. Together comes to 25 prime cost. Add overheads or manufacturing overheads. Just now we calculated 20 rupees, so that we'll be getting works cost, which comes to 45 rupees. To the works cost, add admin, selling, distribution. Let me take an example, 15 rupees. We'll be getting total cost 60 rupees. Add profit of 40 rupees. So selling price of the remote is 100 rupees. This is how they'll fix the price by loading the overheads. I hope you understand what I'm trying to explain. Okay, now the point here is base quantity. Here I took the labor hours. Here I took the labor hours. What we are doing, we are taking overheads divided by labor hours. But please understand, according to our syllabus, in place of labor hours, generally they will be calling it as base quantity. In place of labor hours, generally they will be calling it as overheads divided by base quantity. When it comes to base quantity, there are 6 types of base quantities in our syllabus. There are 6 types of base quantities in our syllabus. Number 1, labor hours. Number 2, machine hours. Number 3, production units, material cost, labor cost, prime cost. These are the 6 different types of base quantities to absorb the overheads. So what we are doing when we are absorbing the overheads to the product A, first step we are calculating the absorption rate. First step we are calculating the absorption rate. In the second step we are charging the overheads. How to calculate absorption rate? Overheads divided by base quantity. We took the example labor hours. How to absorb the overheads? Simple. Base quantity consumed. Listen. Base quantity consumed into absorption rates. So overheads absorption equal to base quantity consumed into absorption rate. This is the formula. So simply I can write here. If you want, you can copy. Number 1, absorption rate equal to overheads divided by base quantity. Number 2, overheads absorbed overheads equal to or charged overheads equal to absorbed overheads equal to base quantity consumed into absorption rate. Base quantity consumed into absorption rate, what we calculated. As I told you, there are 6 types of base quantities. Just now I told you. Based on 6 types of base quantities, we can calculate 6 different absorption rates. For your reference, I can show it here. Look at this. Look at this. 6 different types of absorption rates. 6 different types of absorption rates. First, I took base quantity, formula, suitability. First base quantity is labor hours, simple overhead divided by labor hours. When it is suitable means if the department is labor oriented and similar type of labors are working. When we can take labor hours as the base quantity, when the department is labor oriented, like assembling department. In assembling department, most of the work will be done by the laborers. In such case, we can take labor hours as the base quantity. And the labor hours will be taken into consideration when all the labors are similar type. What is this similar type? There will be skilled, unskilled, semi-skilled, grade A, grade B labors. There will be different category of labors. When we can take labor hours means when the same type of labors are working. Skilled means only skilled. Unskilled means only unskilled. Sir, if there is different type of labors in the labor department, if the different type of labors are working in the labor department, which method will follow means labor cost method. We are going to follow the labor cost method. When the same type of labors are working, labor hours. When the different types of labors are working, labor cost. How to calculate labor cost, absorption rate, overhead divided by labor cost? Next, when you take machine hours, overhead divided by machine hours, when we can use the machine hours means when the department is machine oriented, most of the process are automated. Most of the activities are doing by the machines. Then we can consider the machine hours. Okay, next. Production units, overhead divided by production units. When if the department is producing same type of product or multiple products of same type. So when we can use the production unit, same type of output. Multiple products of same type. What is the meaning of this? Let me take an example. The company is into the manufacturing of the plastic water bottles. When they are producing the plastic water bottles, different colors of bottles will be produced of same type, which is called a multiple products of same type. Understanding? Material cost, overhead divided by material cost, overhead divided by labor cost, overhead divided by prime cost. These are the 3 more methods to calculate the absorption rate. Clear? Okay, now, so this is how we need to calculate the absorption rate. They'll be giving the overheads and they'll be giving the base quantity. Using that, calculate the absorption rate and then charge overhead to the product. Clear? Now, it is the time to understand. It is the time to understand one more concept called as the, see this concept, I'll go step by step, try to understand, if you don't understand, it will be very difficult to answer the question. First, what I explained is calculation of absorption rate. Second, I explained you how to charge it to the product. Now the time to understand budgeted rate versus actual rate. Let us understand the concept called as the budgeted rate versus actual rate. So please understand, in most of the companies, in every company, they will be preparing estimations at beginning of the year or beginning of the period. They'll get to know the actuals at the end of the period. If you calculate absorption rate, using budgeted information, we'll be calling it as budgeted rate or predetermined rate. If you calculate absorption rate using actual information, we'll be calling it as actual rate. Okay, now let me take an example. Budgeted overheads equal to 2 lakh rupees. Budgeted hours or budgeted labor hours. For reference purpose, I'm taking always labor hours. You can take machine hours also, nothing wrong in that. Budgeted labor hours equal to, this is rupee 2 lakh, this is 20,000 hours. Therefore, budgeted rate equal to budgeted overheads 2 lakh rupees divided by budgeted labor hours 20,000, which equals to rupees 10 per hour, rupees 10 per labor hour. This is budgeted rate. Actual overheads equal to 3 lakh. Actual labor hours equal to 15,000. Actual rate equal to actual overheads 3 lakh rupees divided by actual labor hours 15,000 hours, which equals to rupees 20 per hour, which equals to rupees 20 per labor hour. So please understand, there are two rates now. One is budgeted rate and one more thing is actual rate. One is budgeted rate and one more thing is actual rate. Okay, now. Okay. One is budgeted rate 10 rupees per hour. One more thing, actual rate 20 rupees per labor hour. Now the biggest question mark. Now the very big question mark is which rate to be used while absorbing the overheads. Is it budgeted rate or is it actual rate? Most of the people think actual rate has to be used, but please understand, I'll agree with that. Yes, whatever the expense that we incurred, that we need to be recovered by adding it to the product. But the problem is actual rate will get to know at the end of the financial year, whereas budgeted rate will get to know at beginning of the period. This is at beginning, this is at ending. When it comes to product, it will be keep on producing throughout the year. Let me take an example. First Jan 2025, we are starting the year. 31st December 2025, we are closing the year. This 20 rupees will get to know at the end of the year. This 10 rupees will get to know at beginning of the year. We cannot wait without selling the product until 31st December 2025, because this 20 rupees will get to know at the end of the year. We cannot wait until the year end to fix the price. If it is not available, which is readily available, 10 rupees is readily available, which is budgeted rate. There is some issue. Okay, let's continue. As I told you, this 20 rupees will get to know at the end of the period, whereas 10 rupees is available at beginning of the period. 10 rupees is readily available, so we are going to use the 10 rupees, which is called as budgeted rate. Actual rate will get to know at the end of the period. We cannot wait until end of the period to fix the price. So we know that, I to know that what we are doing is a error or it's a mistake. Instead of using actual rate, we are using budgeted rate, which is absolutely wrong. But still, due to some practical issues, we don't have the option. So that we are using the budgeted rate. Clear? Now, when you want to absorbed overheads equal to, we already discussed the formula, base quantity consumed into absorption rate. Just now I clarified, absorption rate means budgeted rate. We are going to absorb using budgeted rate. When it comes to base quantity consumed, when I say base quantity, labor hours, machine hours, production units. What should be considered as base quantity means we are going to take actual base quantity, because once the product is completed, we can measure how many machine hours consumed, how many labor hours consumed, how many units produced. If you know the actual, use the actual. So absorbed, ultimately, finally, absorbed overheads equal to actual base quantity consumed into budgeted rate. Actual base quantity consumed into budgeted rate. According to the example, what I considered actual labor hours. I took the labor hours as the base. So actual labor hours into budgeted rate. The labor hours is, actual labor hours is 15,000 hours and budgeted rate is 10 rupees. So finally 15,000 hours, actual labor hours 15,000 hours into budgeted rate is 10 rupees. So which equals to 1,50,000 is the absorbed overheads. 1,50,000 is the absorbed overheads. So finally, there are three types of overheads: budgeted overheads, actual overheads, absorbed overheads. Budgeted overheads is called as the overheads planned. Actual overheads is called as the overheads incurred. Absorbed overheads is also called as the overheads accounted. Okay, now look at here. Types of overheads. Types of overheads. There are three different types of overheads: budgeted overheads, absorbed overheads, actual overheads. Budgeted overheads is budgeted hours into budgeted rate. Actual overheads is actual hours into actual rate. Absorbed overheads is actual base quantity into budgeted rate. Budgeted hours, I took 20,000 in my example, into budgeted rate is 10 rupees. So which comes to 2 lakhs, which we already taken in the example. Actual hours is 15,000 hours into budgeted rate is 10 rupees. It comes to 1,50,000 rupees is the absorbed overheads. Actual hours is 15,000 and actual rate is 20 rupees. 15,000 into 20, 3 lakh rupees. As I told you, this 2 lakhs is called as overheads planned by the management, planned to incur. This is called as overheads accounted. One more name for the absorbed overheads is overheads accounted. And finally, 3 lakhs is also called as the overheads incurred. 3 lakhs is also called as the overheads incurred. Okay, now the point is, listen. This is the planned overheads. You forget about that. Now tell me, actually, how much overheads is incurred? How much overheads has been incurred? 3 lakh rupees. How much need to be accounted? 3 lakh rupees. Whatever the cost incurred, that we need to account in the books. But how much we are accounting throughout the period? 1,50,000, which is absolutely wrong. This mistake happened because of using budgeted rate in place of the actual rate. Please understand. The actual overheads is 3 lakh rupees. What to be accounted is 3 lakh rupees, but what we accounted is 1,50,000, which is called as under accounting, which is called as the under absorption. Are you getting the point? Actual overheads is 3 lakh rupees that has to be accounted, but what is accounted is 1,50,000. There is an under accounting of 1,50,000. This under accounting or accounting happens in cost books. Please understand. Actuals will be accounted in the financial books. Actuals will be accounted in the financial books. Absorption, a concept of absorption belongs to cost books. So in the cost books, what they accounted is 1,50,000. In financial books, what they accounted is 3 lakh rupees. So in cost books, there is a error, there is a mistake that we need to rectify, which is called as the treatment of under or over absorption. In cost books, the cost is under accounted by 1,50,000 that we need to account. That accounting process is called as the treatment of under or over absorption. So please understand under absorption equal to the formula is absorbed overheads minus actual overheads. Absorbed overheads is 1,50,000, nothing but accounted overheads. Actually to be accounted is 3 lakhs. So there is a under accounting of 1,50,000. Don't look at the sign minus plus. Just we need to write under absorption equal to 1,50,000. Once you identify the error that we need to rectify, that rectification is called as the treatment of under slash over absorption. Treatment of under slash over absorption. So how much is under absorption? How much is under absorption? 1,50,000. This we need to account. At the time of accounting, under absorption of 1,50,000, we need to identify the reasons. Due to what reason there is a under absorption? Now let me classify into two categories. The under absorption can be possible because of two reasons. Number one, due to normal increase in prices. Normal increase in prices or wrong estimation made. Normal increase in prices or wrong estimation made. Any other reason? What is this normal increase in prices? We estimated some X amount, but due to inflation or whatever the reason, the cost has been increased or wrong, estimation has been made wrong. That is the first reason. Second reason, any other reason. If it is because of the normal increase in prices or wrong estimation, we'll be classifying it as the product cost. What is product cost? The cost incurred for the stock valuation. Sorry, the cost considered for the stock valuation. I clearly made one YouTube short on this. If you want, you can watch that. What is product cost? In 1 minute, I have cleanly explained what is product cost and what is period cost. Please understand 1,50,000 is under accounted. The reasons for that can be two reasons. Number one, wrong estimation or any other reason. If it is wrong estimation or normal price increase, classify the cost as the product cost and consider for the stock valuation. Any other reason, classify it as the period cost. If you classify it as period cost, we'll directly transfer it to the P&L account. Let me take an example. That out of 1,50,000, 1 lakh rupees is a product cost and 50,000 is a period cost. Just example I am taking. This 50,000 rupees directly transferred to the P&L account. Whereas this 1 lakh rupee will be considered for the stock valuation. Are you understanding? When I say stock valuation, in case of manufacturing companies, there will be three types of stocks: raw material, work in progress, finished goods. When it comes to valuation of raw material, we are not going to consider the overheads. Raw material will be valued at purchased cost. When it comes to work in progress, we will be considering manufacturing overheads. For finished goods also, we will be considering manufacturing overheads. Even if you look into the cost sheet, we will be getting prime cost. At the time of getting prime cost only, it includes raw material. Above the prime cost, there is no overheads consideration. To the prime cost, add the manufacturing overheads, we'll get gross work cost, and then we'll evaluate the work in progress and finished goods. So overheads will form part of only work in progress and finished goods. Are you understanding? So what I mean to say, this 1 lakh rupees will be charged to work in progress and finished goods. We are not going to charge it to the raw material. So what I'll do, this will be classified into two categories. considering for the work in progress, considering for the work in progress and completed goods, goods completed or finished goods. When it comes to finished goods, again it have two types. What is two types? Sold, or I can call it a full form, goods sold, closing stock. When it comes to finished goods, it will be having two parts, goods sold and lying as a closing stock. Let me take an example, work in progress. Okay, first let me write the goods sold. Just example I am taking, the number of units sold is 30,000. The number of units sold is 30,000. Closing stock of finished goods is 10,000. Whereas work in progress is 20,000 units. 20, everything is units. 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 Work in progress is 50% completed. Work in progress is 50% completed. Now what we need to do? We need to charge this 1 lakh rupees against work in progress stock, finished goods stock. What we are going to do, that calculation is called here supplementary rate. To charge to this product, see, we need to account to work in progress, goods sold, closing stock. When you want to account it to that, first we need to calculate supplementary rate. How to calculate supplementary rate means overheads, under absorbed overheads, whichever classified as product cost divided by base quantity. According to given information, what is the base quantity means units. They given everything, work in progress, goods sold, finished goods, everything has been given in units. So take the units as the base. If they give hours, take the hours as the base. Please understand, I am going step by step. First, I have explained you how to calculate absorption rate. Then I have explained you how to charge it to the product. Then I have explained you budgeted rate versus actual rate. Then I have explained you absorbed overheads. Then I have explained you under or over absorption calculation. Now I am explaining treatment of under or over absorption. When it comes to treatment of under or over absorption, there will be two classifications. The under absorption happen because of the normal increase in prices or wrong estimation. Second one is any other reason. If it is due to wrong estimation or normal increase in prices, classify it as the product cost. Any other reason, classify it as period cost. If you classify it as period cost, directly transfer to P&L. If you classify it as product cost, consider for stock valuation. How to consider for stock valuation means that overheads will be considered for WIP stock, finished goods stock. I took the example. Based in the example, I took the units. Units as the base to apportion the cost. Now, I am going to call it as the supplementary rate. Listen. Supplementary rate. Why they given the name called as supplementary rate means because they are failed. The management have failed to account the management has failed to account the correct cost. When someone failed, they will be writing supplementary exam. So that they give the name called as the supplementary rate, which rectify the error. Supplementary rate equal to 1 lakh, whichever the cost to be accounted, divided by number of units. How many units is there? How many units are there? 20,000, 30,000, 10,000. Can we add the unit directly means? Absolutely no. The problem is these 20,000 units are 50% completed, balance these units are 100% completed. You cannot add 100% completed unit directly with 50% units. So then what we need to do? Very simple. 30,000 into 100%, 30,000, 10,000 into 100%, 10,000, 20,000 into 50%, 10,000. Now this is called the equivalent units. This 10,000 units is called the equivalent unit. 20,000 into 50% will get equivalent units. I know that I am going little bit fast. I am making this class in the assumption that you already attended the classes. If you want to go slow, you can reduce the speed. Now, equivalent units is 10,000 plus 30,000 plus 10,000 totally comes to 50,000. So 50,000 is the equivalent units which equals to 1 lakh divided by 50,000 rupees 2 per unit. So how much is accounted to work in progress stock? Listen. How much will be accounted to work in progress stock means 20,000 into, okay, how much to be accounted to WP equivalent units is 10,000. Please be careful. 2 rupees per equivalent unit. It is not per unit. There is a difference. It is not per unit. It is equivalent units. The equivalent units of the work in progress is 10,000. 20,000 into 50%, 10,000 into rupees 2. Here it is 30,000 into rupees 2. Here it is 10,000 into rupees 2. It comes to rupees 20,000 allocated to WIP, rupees 60,000 allocated to goods sold, rupees 20,000 apportioned to closing stock. Totally 1 lakh is accounted. This is how we need to account under our over absorption. The same treatment can be given for over absorption. But in your syllabus, the whatever the questions given in the institute study material, all are based on under absorption. Clear? Finally, we need to give the impact on profit. We need to write the impact on profit. How to write the impact on profit means under accounted cost is 1,50,000. That is where our discussion started, which is called under absorption. That 1,50,000 has been accounted. After accounting, how much is the profit decrease means, please understand the profit would have been decreased by 1,10,000. Now the biggest question mark is, sir, how you arrive at 1,10,000? I'll tell you. Impact on profit equal to, many people say 1,50,000 as the answer. We accounted 1,50,000. Under accounted means which is unaccounted. Now we are accounting. When you account the cost, profit is going to be decreased. How much we accounted? 1,50,000. But out of this 1,50,000, cost allocated to WIP stock, closing stock of finished goods is 40,000. To this extent, stock is unexpired. To this extent, cost is unexpired. Listen. Fourth point of the product cost, period cost. Product cost will be expired to the extent of goods sold, unexpired to the extent of closing stock. So it will be unexpired to the extent of 20,000 plus 20,000, 40,000. Period cost will expire fully. Entire 50,000 is expired. Expired means reduced from sales. 50,000 reduced from sales, 60,000 reduced from sales. But 20,000 is not reduced. So what is the total amount reduced is 50,000 plus 60,000, 1,10,000. So to avoid the confusion, simply I am putting like this: 1,50,000 minus 40,000. Finally, impact on profit is 1,10,000 decrease. To stabilize this, I will be giving step by step. Whatever the discussion that I made till now, I have given in the step by step form. Look at here. Please copy this. Please pause the video and copy this. It is so helpful to solve the question based on the under or over absorption. Steps to be followed for under or over absorption questions. Step number 1: calculate absorbed overheads. How to calculate absorbed overheads? Actual base quantity into budgeted rate. Then calculate under or over absorption. Formula is absorbed overheads minus actual overheads. Nothing but accounted overheads minus actual overheads. If accounted overheads is more, then over accounted. If accounted overheads is less, then it is under accounted. Again, I am telling you, this under or over absorption is possible in cost books, but not in the financial books. In financial books, we'll always account the actual overheads. There will be no change in that. There will be no change in the actual overheads accounting in financial books. Mistake happened or error happened in the cost books. They are accounted in the name of absorbed overheads. The difference is called the under accounting or over accounting in cost books. Under accounting or over accounting in cost books. Now, treatment of, so once we calculate the under or over absorption, treatment of under or over absorption, first we need to look into the reason. Normal increase in price, abnormal reasons. Normal increase in price, product cost, stock valuation. Abnormal reasons, period cost, transfer to P&L. Step 4, supplementary rate. This point is regarding this stock valuation. Whenever it comes to stock valuation, first calculate the supplementary rate. Under or over absorption divided by base quantity. In our example, I took units as the base quantity, so that I took equivalent units. If they given hours, take the hours. Then accordingly we'll allocate to the work in progress stock, finished goods stock, goods sold. Once we're done with that, finally we'll write impact on profit under or over absorption minus unexpired cost. The cost is unexpired to the extent of the stock. This is how we need to solve the questions. All of you clear? Now let us see the questions, whatever they given in the institute material. Okay. In practical questions, question number 7. In practical questions, question number 7. Look into that. In a factory, overheads of a particular department In a factory, overheads of a particular department are recovered on the basis of the 5 rupees per machine hour. Listen. In a factory, overheads of particular department are recovered on the basis of 5 per machine hour. So, machine hour is the base quantity. Machine hours is the base quantity. In example, what I discussed, I took labor hours. Here they got machine hour. That's fine. The total expenses incurred. The word incurred says actual. The total expenses incurred and the actual machine hours for the department for the month of August are incurred overheads is 80,000. Actual machine hours is 10,000. Let me write that. This is the actual overheads. Incurred word says actual and this is the actual machine hours. Okay, let me write full form. Actual machine hours. Of the amount of 80,000 incurred amount, 15,000 become payable due to an award of the labor code and 5,000 was in respect of expense of the previous year booked in the current month August. So please understand, total actual expense incurred is 80,000. Out of 80,000, 15,000 paid because of they mentioned one reason. What is the reason that they mentioned? 15,000 payable due to award of the labor code. So due to some violation of law, labor code has been levied the penalty of 15,000 rupees and 5,000 rupees accounted in the current period which belongs to last period. So finally, when it comes to actual overheads, see, labor payment penalty is not an overhead. That cannot be considered for the stock valuation. And last year cost cannot be considered in the current year for the stock valuation. Please understand, 80,000 is the total accounted cost. Out of 80,000, 15,000 because of the penalty, 5,000 because of last year cost accounted in the current period. These two things cannot be considered. So first we'll exclude that. If you exclude that, the actual overheads is 60,000. The actual overheads is 60,000. Are you following the discussion? Next. Actual production was 40,000 units, of which 30,000 units were sold. Production is 40,000, sold is 30,000, closing stock equal to 10,000. There is no work in progress details. In this question, there is no work in progress details. On the analysis of the reason, it was found that 60% of the under-absorbed overheads was due to defective planning and the rest was attributable to normal cost increase. So, 60% due to defective planning. It is one of the abnormal reason. It is one of the abnormal reason. Any other reason, defective planning, penalty, are you understanding? Any other reason apart from normal increase in cost or wrong estimation. Apart from these two reasons, any other that they mentioned will classify it as period cost. So that means out of under absorption, 60% due to defective planning, which is called as period cost, and balance 40% we are going to consider it as the product cost. Show the treatment of under absorption, overall under absorption overheads in the cost accounts. That will happen only in the cost accounts. In financial books, there is no concept of under over absorption. Clear? Now, total expenses incurred in the month of August, 80,000. I already told you reduce these two costs, 20,000. The net amount incurred is 60,000. But overheads recovered for 10,000 hours. See, recovered. The word recovered is never absorbed, accounted. Absorbed overheads is also called as the recovered overhead, charged overheads, applied overheads. Are you understanding? Accounted overheads. These are the different names. Total overheads recovered. How to calculate absorbed overheads? I already told you. Absorbed overheads equal to actual machine hours in this question. Actual machine hours into budgeted rate. Actual machine hours 10,000. Actual machine hours 10,000 into budgeted rate. What is the budgeted rate? 5 rupees. So which initially they mentioned 5 rupees per machine hour. So 10,000 into 5 rupees, 50,000 is the absorbed overheads, whereas actual overheads is 60,000. Actually incurred 60,000, absorbed is 50,000, under absorption of 10,000. Understanding? There is an under absorption of 10,000. Out of this 10,000, two classifications, 40%, 60%. 60% due to defective planning, which will treat it as period cost. 40,000 will be classifying it as the product cost. 40% is 4,000. 60% is 6,000. This 6,000 will be transferred to P&L account. 4,000 will be considered for the stock valuation. Look at here. 60%, 40%. 40% is 4,000. Consider for stock valuation using the supplementary rate. How to calculate supplementary rate? 4,000 divided by 40,000 units. Total production is 40,000. Per unit it is 0.1. Out of that, goods sold is 30,000. 30,000 into 0.1, 3,000. 30,000 into 0.1, 3,000. This will be transferred to, it will be expired, means charged to the P&L. It will be added to closing stock, carry forward to next period. So the impact on profit, total amount what we accounted, under accounted is 10,000 minus unexpired cost is 1,000. So the impact on profit is 9,000. That is the answer for the question, for this question. Okay, next. In a manufacturing unit, look at the question number 8. Look at the question number 8. In a manufacturing unit, factory overheads was recovered at predetermined rate. I already told you, budgeted rate is also called as the predetermined rate of rupees 25 rupees per man day. In this question, they taken man days as the basis. Previous question, machine hours. In our example, labor hours. Be careful with the base quantity. Here they taken man days. So 25 rupees per man days is the budgeted rate. That is the budgeted rate. Next, total factory overhead expenses incurred and the man days actually worked are 41.5 lakhs is the actual overheads. This is the actual overheads. 1.5 lakh man days. This is the actual man days. Actual man days. Now, out of the 40,000 units produced, 30,000 units were sold. Again, the closing stock is 10,000. Same story. The only thing is base quantity changed. Next, on the analysis, on the analyzing the reasons, it was found that 60% of under absorption was due to defective planning. Same story, and the rest was attributable to increase in overhead cost. So this 40% is a product cost, and this 60% is a period cost. Explain how under absorption overheads is treated in the cost account. First of all, actually incurred. Actually incurred is 41.50 lakhs. Absorbed overheads equal to actual man days. How many actual man days? 1.5 lakhs is the actual man days into predetermined rate is 25, which comes to 37.5 lakhs. If I'm not wrong, it is 37.5 lakhs is the absorbed overheads. Actually incurred is 41.5, absorbed is 37.5. The difference is called the under absorption or under accounting. Difference is about 2.5, 4 lakhs. 4 lakhs is under accounting. Look at here. 4 lakhs is under accounting. Out of 4 lakh, two classifications, 60%, 40%. 60% is 2 lakh 40,000, which is due to lack of defective planning, which is due to defective planning. That is what they given here. Balance is due to increase in cost. This increase in cost, considering it for the supplementary rate. What is the supplementary? Using what we can calculate supplementary rate? Units. Again, unit 40,000 units produced. So 1,60,000 divided by 40,000. 1,60,000 divided by 40,000, 4 rupees per unit. So how much is charged to goods sold? 30,000 into 4, 1,20,000. How much is charged to closing stock? 10,000 into 4, 40,000. So that is what they accounted here. 40,000, 1,20,000. I hope you understand this. Next. Look at here. This question is important, little complicated also. Next two questions what I am going to discuss is little bit complicated. Last attempt, Jan 25. Jan 25 direct question from the practical question. Okay, let me explain this. Look at here. A light engineering factory fabricates machine parts for customers. The factory commenced fabrication of 12 number machine parts as per customer specifications. The expenditure incurred on the job for the week ending 21st August is as tabulated below. So actually the company is into the fabrication work and they commenced fabrication of the 12 number parts. Regarding the 12 number parts, they given the information as on 21st August. Look at here. Direct material incurred is 780, direct labor 20 hours at the rate of 15 rupees per hour, 300 rupees. Then they given machine facilities. So this is direct material, direct labor. It is not our part of discussion. The discussion is overheads. When it comes to overheads, we need to take machine cost. Machine number 1, 4 hours at the rate of 45, 180. Machine number 2, 6 hours at the rate of 65, 390. Totally 570. Total comes to 1650. Apart from machine 1, machine 2, there is some other overheads that has been accounted at 8 rupees per hour on 20 man hour basis. Here also hours, but here they specifically mentioned man hours. What hours might be? This means machine hours. Because to charge the machine 1 cost, we need to take machine hours. To charge the machine 2 cost, we need to take machine hours of the machine 2. Okay. When it comes to other overheads, they are accounting based on manual hours. So 8 rupees into 20 manual hours 160, totally 1810. So cost sheet is already prepared for the 12 parts production. Understanding, cost sheet is already done. Now look into the problem. What is the problem? The overhead rate of 8 rupees per man hour is based on 3000 man hours. Please understand. Whenever they want to account the overheads, they would have accounted using budgeted rate because they don't know the actual rate. Always accounting will be done based on budgeted rate. That budgeted rate of 8 rupees is calculated using 3000 man hours. So 3000 man hours is budgeted man hours. Sir, where they mention budgeted man hours, please understand. Unless you have the clarity on the concept, identifying this kind of understanding these kind of points are difficult. Look at the wording. Look at the wording. What they given in the question. What they given? The overhead rate is 8 rupees per man hour is based on 3000 man hours. That 8 rupees is a budgeted rate. Sir, where they mentioned absorption will happen at budgeted rate. The 8 rupees is calculated using 3000 man hours. So 3000 man hours is budgeted man hours. Are you understanding? Next. Similarly, the machine rates are based on the normal working of machine number 1 and 2 for 40 hours out of 45 hours per week. In a week, 45 hours they work, but how many hours they plan to work means 40 hours. So that means machine 1, machine 2 is calculated. Machine 1, machine 2 absorption rates. Machine 1, machine 2 absorption rates is calculated by using 40 hours. Now, ultimately, what I mean to conclude is 8 into 3000 will be getting 24,000. That is the, okay, let me write here. 24,000 is the budgeted overheads or budgeted other overheads. If you want to calculate machine 1 budgeted overheads, 45 rupees is the budgeted rate. Budgeted hours is 40. 45 into 40, here it is 65 into 40. We'll be getting budgeted overheads. Clear? I haven't come to the requirement. I haven't explained to the requirement, just I'm explaining the question. Next. After the close of each week, the factory levies a supplementary rate for the recovery of the full overhead expenses on the basis of the actual hours worked during the week. Once the week gets closed, they are going to charge with the actual rate. What they given is budgeted rate and what they given is budgeted base quantity. Now they started speaking about actual rate. In this paragraph, they started speaking about actual rate. What they stated, once the week gets completed, they are going to levy with the actual rate. They are going to account based on the actual rate using supplementary rate. So supplementary rate is a gap between actual rate and budgeted rate. In place of actual rate, we are using budgeted rate. The difference is called as the under or absorption. Actual rate is 12 rupees, budgeted rate is 10 rupees. We are accounting using 10 rupees. There is a difference of 2 rupees. This 2 rupees can be called as the supplementary rate. Getting clarity? Look at this. Let me continue. During the week ending 21st August, the total labor hours worked 2,400. That means at the end of the period, they're taking this list. When it comes to end of the period, they would know the actuals. The actual labor hours is 2,400. Actual machine 1 and machine 2 is worked for 30 hours, 32.5 hours. These three informations are the actual hours. First one is actual man hours, 22,400. Actual machine number 1 hours, 30. Actual machine number 2 hours, 32.5. Clear? Now what they are asking? Prepare the cost sheet for the job. For the fabrication of total number of machine parts, duly levying the supplementary rate. Sir, already prepared the cost sheet. I know that they already prepared the cost sheet, but the problem is they are accounting using budgeted rate. Now what we need to do? We need to calculate actual rate. They given the budgeted rate, difference is supplementary rate. Using that supplementary rate, again we need to redraft the cost sheet. Now how to calculate that? Listen to me carefully. See here. Let me clarify. Now, There are three different classifications under overheads: machine 1, machine 2, and then other overheads. Let me write as overhead. Other overheads. Other overheads, they given the budgeted. Let me take budgeted hours first. Machine 1 budgeted is 40 hours. Machine 2 budgeted is 40 hours. Other overheads is man hours. Budgeted is 3000. Budgeted rate given in the question, this is 8 rupees. This is 45. This is 65. By multiplying budgeted hours into budgeted rate, we'll get budgeted overheads. Look at here. Let me take it from this calculation. No, budgeted over 1800, 2600. Let me take that. 1800, 2600. This comes to 24,000. Now to calculate the actual rate equal to actual overheads divided by actual hours. Actual hours given in the question in the last paragraph. Actual overheads is not given. Assumption is budgeted overheads equal to actual overheads. So I'll take the same thing: 1800, 2600, 24,000 divided by actual hours. Actual hours of machine number 1 is 30. Actual hours of machine number 2 is 32.5, and actual man hours is 2400. Now we'll be getting actual rate: 1800 divided by 30. It will be getting 60. It is 10. Let me calculate this. 2600 divided by 32.5 equal to 80. So this is the actual rate. Budgeted rate is already known. This is the actual rate. This gap is called as the supplementary rate. Look at the machine 1. Look at the machine 1. Actual rate is 60. Budgeted rate is 40. So the difference is 15. 15 under accounted. 15 rupees under accounted. Actually to be accounted at 60 rupees, but they accounted at 45 rupees. There is an under accounting of 15 rupees per hour. Next 80, 65. There is an under accounting of 15 again. There is an under accounting of 15. And here 10, 8. There is an under accounting of 2 rupees. So that is what they taken here. Supplementary rates: 2 rupees per hour, 20 hours, 40. See, the same cost sheet again they redrafted. Till here it is similar to the question. Then we need to add the supplementary rates. Supplementary rates is other overheads: 20 hours. Each hour under accounted is 2 rupees, 40 rupees. Machine facilities: machine number 1, 4 hours. Each hour under accounted is 15 rupees, 60. Machine 2, 6 hours. Under accounted is 15 rupees, 90. So total comes to 2000. Getting the clarity? Next. So they given the working notes. You can go through this. So by this we done with that question. Next, I think it is the last question based on this concept. I can mention it as a very important question because in the Jan 25, the same question came in the examination. The same question has came in the examination. Look at the question. Very simple. Go step by step. Calculate absorbed overheads, under-hour absorption, treatment of under-hour absorption, supplementary rate, impact on profit. 5 steps. Okay, now in every question you can do the same thing. Now look at here. ABC Limited manufactures a single product and absorb the production overheads at predetermined rate of 10 per machine hour. 10 rupees is the budgeted rate, machine hours is the base quantity. Base quantity, budgeted rate. At the end of the current financial year, it has been found that actual production overheads incurred 6 lakh rupees. This is the actual overheads. It included 45,000 on account of written off of obsolete stores and 30,000 being wages paid for strike period under an award. So what we need to do, these things are not the overheads. These things are not the overheads. Some other expense incurred. Exclude that. 45,000 due to obsolete stores. That is but material loss. Obsolete stock is what? Material loss. Why we need to consider it as an overhead? Next, 30,000 due to strike period wages. That is regarding labor. So exclude those. 6 lakhs minus 45,000 minus 30,000 together comes 75. Okay, 5 lakh 25,000 is the actual overheads that need to be considered. Next, production and sales data for the current year is as under: production finished goods 20,000 units, work in progress 8,000 units, 50% complete. Be careful. Finished goods sold 18,000. Listen. Production is 20,000, sold is 18,000. So closing stock of finished goods is 2,000. 2,000 units. Okay, next. Actual machine hours worked during the period is 48,000. It has been found that one third of under absorption of production overheads was due to lack of production planning, and the rest was attributable to normal increase in cost. So first we need to calculate under absorption. To calculate the under absorption, first we need to calculate absorbed overheads. Absorbed overheads equal to actual machine hours into budgeted rate. Actual machine hours given in the question 4,80,000 into budgeted rate given in the question 10 rupees, which comes to, I'm sorry, 48,000 hours. Actual machine hours given in the question is 48,000. This is here, okay. 48,000 and budgeted rate is 10 rupees. In the top of the question given 10 rupees. So 48,000 into 10, 4,80,000. 4,80,000 observed overheads. Actual overheads, as I told you, we need to take only 5,25,000. Totally 6 lakhs given, exclude the material loss and exclude the strike period wages. The net amount comes to 5,25,000. This gap is called as the under or over absorption, which comes to 45,000. That gap is called as the under or over absorption, which comes to 45,000. Clear? Okay. Out of this, they told that one third is due to lack of production planning. One third is due to lack of production planning. So, remaining due to normal increase in prices. Two third is because of normal increase in prices, lack of production planning, one third. So, one third comes to 15,000, two third comes to 30,000. This will be transferred to P&L and this will be considered for the supplementary rate. When it comes to supplementary rate, 30,000 divided by equivalent units. What are the equivalent units? This 8,000 are 50% completed. So 8,000 into 50%, 4,000. 2,000 is the closing stock, 18,000 is the goods sold. 2,000 plus 18,000 plus 4,000, 24,000. So 30,000 divided by 24,000, which equals to, I think, 1.25. 1.25 per equivalent unit. So what we'll do, 4,000 into 1.25, 2,000 into 1.25, 18,000 into 1.25, we'll get the cost allocated. Okay, now see here. 4,000 into 1.25, 2,000 into 1.25, 18,000 into 1.25. We got the cost of total 30,000 is accounted. Okay, this is the working notes given. So this is the concept of the under or absorption. Very simple if you understand and go by the step by step as how I given the note. Okay, thank you so much. If you are watching my videos, please mention in the comment box so that it will be motivated me to make more videos. That is one thing. And one more thing, whatever the doubts that you have, please mention it in the comment section. I will be definitely responding to that. I'm awaiting for your response. If you feel like any changes to be done, please let me know. I am doing all these videos just to benefit to the students. Okay. Thank you so much. Thank you so much. I'm winding up for the day.